Morning, Steve Freed in Chicago with the morning grain comments. Markets are a little easier overnight. I think when we were reading some of the reports yesterday, the market was looking at a little bit better South American weather forecasts over the next 2 weeks that could offer some resistance to the bean market. Despite the fact that funds are record short corn and big shorts in the wheat market, we just don't really see anything that's going to help those markets right now. We're still trying to get over the fact that the USDA raised the corn yield and corn crop in their November crop estimate, and that there is talk that the final crop number could even be bigger. 2.5 billion bushel U.S. corn carryout is right now a little bit too much for the market to rally. As far as the wheat market is concerned, still concerned about too much wheat. There was a couple articles written about the fact that the Russian crop could get bigger than the USDA's estimate, and that could offer some resistance to U.S. wheat exports. There was also some articles written about higher currencies in countries like South America and Russia could encourage those farmers to keep continuing to increase production. That would cut into the U.S. export demand and really put pressure on U.S. farmers to lower the acres that were planted here. Right now, for 2018, we're thinking that farmers are going to plant pretty much the same corn, bean, and wheat acres that they planted last year, and that might be a little bit too much. South American rains in Brazil, dry in Argentina, both I think is good for the crops. And the 2-week forecast has a little bit more rain coming back to Argentina. That's pretty critical so that they just don't dry down and go into a kind of a La Nina type dry factor. As far as we're looking at soybean harvest here in the United States, somewhere between 82 and 85% done. Corn, 95 to 97% done. And even though corn prices are low, we had a few analysts that suggest farmers should increase their marketing of the 17 corn crop, selling to March around 272, 275, 372, 375, selling 19 corn around 417 on the DEES 19, and selling 18 corn around 401 on DEES 18. So not a lot of upside potential there. Funds bought beans, meal, corn, and wheat on Friday, sold soybean oil, continue to be long beans, short a record amount of corn, and short wheat. Open interest continues to go up in all the grains. So a little bit easier tone, and we'll just kind of see how we slide into the holidays and what we have forward to in the first quarter of 2018. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.